Welcome everyone to the first ever episode of the Magnetic Growth podcast. I'm going to be the host throughout, unfortunately for some of you guys, or maybe fortunately, who knows. But today, let's get straight into it. We have a very special guest and a good friend of mine, Adam Saddique. Adam is a director of Cryptonary. If you use Instagram or any other form of social media, I'm sure you've probably come across Cryptonary at some point. They create amazing organic content and have a tremendous reach. But beyond that, they are the go-to platform for all things crypto. They provide expert research, analysis, and tools for the everyday crypto investor. But Adam is more than just a director at Cryptonary. To me, he's an expert marketer. As I just touched on at the start, Cryptonary has one of the largest organic reaches in this space with over 600,000 followers on Instagram alone, racking up millions of impressions. And therefore, Adam is the perfect guest for a growth podcast. Adam, how are you today, man?
I'm good, Jake. Thank you for the intro. Kind words. And yeah, I'm excited to be one of the first guests here. Let's make it a good one.
Perfect. And do you want to add anything to that intro, or you think I've done you well there?
You did it. You did a phenomenal job. Fair play.
Thank you very much. So let's cut the bullshit, get straight to it. What are your thoughts on the current market?
Current market. So look, the start of May, we saw a pullback recently. I think a lot of people are panicking and freaking out a little bit. For me personally, this is nothing. This is two big pros, actually. It's an opportunity to buy in low, to continue, stacking bags. But at the same time, it gives someone like myself who's building a business in Web3 extra runway. Because when the market started to pick up, if anything, I'm like, shit, this is getting in the way. I need time to build. So it's a blessing for me. And I'm excited about it. I don't think there's anything to cry about. I think we're looking at a few weeks, top end, maybe 2 months of a bit of a pullback and moving sideways. But I think this is just necessary for a massive run. There's a huge opportunity for builders.
Yeah, I couldn't agree more. I think when the market started picking up earlier this year, as a builder myself, I was not expecting it to pick up when it did, and I could have arguably done with more time. So we're back to it. We're back to the building. So you're thinking, what, 2, 3, 4 months, market picks up and yeah, we're all in a good position, or?
Yeah, pretty much. Look, I think you're going to have assets that outperform regardless. One of the assets we've spoken about quite a lot lately, some of the meme coins, and some of them are smashing all-time highs. So you are going to get assets that outperform. But if we're looking at something like Bitcoin, I can see us moving sideways for a while. I don't see it going down much further. I think you're going to see something pretty stable. I don't see further pullback from today, which is the 3rd of May. I don't see too much further downside. Of course, anything can happen, especially when there are these big macro moves. I would be ignorant to neglect, geopolitics right now. So anything can happen. But I think we move sideways for a bit, and I'm hoping for a run to start in the next couple of months. I do think we're going to have a fast, explosive run this time from everything I'm seeing. But yeah, that's how I'm playing it.
Cool. And like you said, we've just had a bit of a mini run. Cryptonary, explain what it is at the start. How did you guys take advantage of that run? We had a little conversation off the podcast and it seemed like you did pretty well. But yeah, talk us through what your strategy was within that period, and also any growth that you saw in that period as well, and how you leveraged the market conditions to grow.
Yeah, absolutely. So from a investment perspective, we try to rotate away from focusing on fundamentals into narratives. I think Cryptonary throughout 2022, 2023, we were trying to chase the next big performer, but that doesn't happen in a bear market. We're not finding 30x's, 50x's, 100x's in those conditions where they're abundant in bull markets. So when the market started running, we said, okay, now let's try and find winners. The reason why you look for utility in a bear market is like a hedge against the downside. If a project has revenue or like a sound team, you're like, at least it's not going to zero. You want to try and outperform the majors, and I don't want to take a crazy high risk. So let's invest in assets with some kind of logic behind them, so they can hopefully outperform, but you're hedging. In this market, when things picked up, we said, let's go high risk. right? There's going to be billions and billions and billions of dollars made for the retail audience in this cycle, right? There's no doubt. But where is that going to come from? Is it going to come from looking at a project that has really great tokenomics and a good team? Or is it going to be focusing on where the attention is? So we really took a pivot from focusing on looking at the technicals of assets to focusing on narratives, marketing of projects, the branding, the community, the hype, the energy. And as soon as we made those switches, we hit some big winners. A couple of the assets, a token called WIF, which I'm sure a lot of the listeners will have heard of.
I think everyone's heard of that by now.
Yeah. So we got in, we wrote about WIF at 3 cents. PopCat, also quite popular. We got in at 4 cents. Bowden, very, very early. So really killed it with the meme coins, but then some of the RWA plays, AI plays, etc. So that's Cryptonary as far as an investment perspective. As far as a growth perspective, so things really started to pick up for us in around December, right? But it was a weird time because we tried a new offering. We changed our price points to make it more accessible. We started running trials and special offers. So things picked up, and I wasn't sure whether it was completely due to the offering or an increase in the market, but it was sentiment. I think we went from around 10 million impressions a month to around 30 million between like November through December through January. We did see a bit of a pullback around Feb, March, but the attention exploded. And then we obviously leveraged paid media too, to just create a feedback loop that just was, you can't beat it, right? In order to scale a business, you need to create momentum and then take that momentum, take learnings away, and then create a cycle where you're just getting faster and faster and faster. So that's what we did.
Awesome. So a couple of things to dissect there. Firstly, you took a turn towards meme coins. My assumption would be because meme coins are assets that grow very quickly. And as you alluded to, the marketing and the branding of any project, whether it's a meme coin or an AI project or a deepin project, whatever it might be, is super important when it comes to the actual growth of that project, which is something that I just wanted to clearly highlight. The second was your approach in terms of market sentiment. So we obviously were building together, living in the same building for a while in not so great times, but we kept building, we kept testing, and we kept doing everything to try and keep moving forward despite the conditions. What's your kind of best advice to someone that is thinking, I've only got a limited time to make something of this before a market? Like, how do you keep a level-headed approach when it comes to growth, no matter what the market is? And also, what's like the biggest indication to start pressing on growth when the sentiment changes?
For sure. It's a very interesting question. There's two of them. I'll actually answer the second one first. So knowing when to capitalize on the attention is, look, keep a very close eye on your key indicators. So for us, it was acquisition costs. When we're getting subscribers in, we didn't up our ad spend until the cost for acquisition dipped below a certain amount. So when the market was dull, we were trying to go off, we had a certain CPA number, which was lifetime value. That was like, okay, we're happy to go with this. We wouldn't scale past that spend. As soon as we broke certain milestones, so when it's like, wait a sec, it's not lifetime value acquisition cost now, it's 3 months or it's 2 months. You increase your ad spend proportionately. So that's how we really started to pick up. And then just keeping an eye. I'm sure you get this too. I know you're not in as much as the media buying space, but when you are working with other companies as well and like doing growth work, you can calculate your CPMs, cost per impression. You can calculate your cost per clicks. You can keep an eye on traffic, and you just have to capitalize. Just keep a very close eye. And when the cost for these key metrics starts to dip, Phil, that's when you double down. And for us, our biggest ability was to leverage paid advertising. And even, me and you have spoken about growth a million times, scaling the business model by introducing new revenue streams and new ways to reach new audiences. Got to double down then. And as far as, having the mindset for it and dealing when the market's dull and, persisting, I think you get it better than anyone. It just comes down to who you are as a person, what your grit is. It's a sexy space to be a part of when things are picking up, but it's horrible and ruthless when things are down. But I think you have to be a little bit crazy to want to work in this space in the first place. You've got to be unique. So it just comes naturally, to be honest with you. People think I'm crazy for being 100% in crypto from an investment perspective. But for me, I think you're crazy if you're not. And I just love building businesses. It's as simple as that. It's hunger, passion, energy, drive.
I know you've got plenty of that, and the various conversations we've had over the years definitely, definitely echo that. Something you picked up on there is you're 100% in crypto. Now, I know you as someone who comes from a marketing background. You've already spoke so much about tracking data, the importance of it, and how you can leverage different types of media to scale and grow. And again, just really hitting home on the point of how important it is to look at the data and track your KPIs, your key performance indicators, to be able to plan out your next move. But what I want to know is, why crypto? Because your skill set could be applied to any market and was being applied to other markets before you took the jump and came into Cryptonary. So, Adam, why is crypto your thing?
Look, I think there are a bunch of reasons. For anyone who doesn't know, I got my background in e-commerce. So I always jumped on different trends. I like Google ads, Facebook ads, social influencing, and I'd sell physical products. So my first issue was the scalability of something like this. And thankfully, I became an investor in crypto. My main reasoning is I'm a bit unconventional, right? I don't like our current financial system. I was invested in index funds and traditional markets, and I wasn't a fan. They were fundamentally flawed. When I came across Bitcoin in the beginning, it was like, okay, we're onto something here, right? It might not have the best reputation, but I like the philosophy behind it. And the further I studied finance, the more into crypto I got. And then it just synced up. I looked at the crypto industry and I thought, you know what? Most people don't know what they're doing here with marketing and branding. A lot of the growth is coming because of just the insane opportunity, right? The market was right for the taking because most people who got into crypto, they were clueless when it came to business and marketing. So I looked in and I thought, let me see if I can apply my foundational knowledge to this sector that's underserved, and let's just see how it goes. And honestly, it was easy. It was very easy. We got very lucky, very thankful, good team, but just used a bit of common sense and just came in and dominated the market. There's no one in the retail crypto research space who comes close. And we're coming for the institutional side too. And it's going to be quite easy, to be honest with you.
I admire the confidence. Always have been a confident fellow.
I'm sure you would
But no,
agree.
I don't doubt you. Yeah, I don't doubt you at all. I know your work rate and your skill set, and from watching the journey and what you've already accomplished, there's I'm never gonna doubt you, no matter how big or
Mr.
crazy.
Lee. Yeah, but be honest, Mr. Lee. This is not even about me. You're someone who works with companies who are trying to build brand and grow it in the crypto space. Wouldn't you agree that most projects have no clue what they're talking about? They're getting by off luck, or they're getting by of just there not being enough competition in the market. So if you come in and you're grounded in any sort of reality, it really is ripe for the taking. Dana White, the UFC president, he talks about this all the time. He's like, look, we live in such a soft world that if you have a hunger and a passion, everything is attainable. So my thing, I don't think I'm a special guy. I'm certainly not. I'm very lucky the people I work with, but we're in a space with endless opportunity. And in my opinion, very little quality competition.
Yeah. I mean, my 2 cents on that really comes down to the same alignment as you, Adam. I definitely think that marketing and growth has not been done well in the crypto space. I think, to be honest, the reason why I founded Magnet in the first place, I started doing growth consultancy in Web3, switched over from doing it in Web2 to essentially support me while I was building my own startup in the Web3 space. And I could not sit there and not build a proper growth company in this space because of the gaping gaps and holes. I think the biggest thing is in Web3, the two biggest growth levers we have are digital ownership and community. And these are two growth levers that don't really exist in any traditional growth models. That's why I created the magnet methodology and the magnet framework in the first place, to really include what's most powerful to growth in the specific market. And a couple of years ago, there were hardly any growth tools available in this space. There was hardly any ways to be able to track data significantly in the Web3 field. So a lot of people were just marketing and growing completely blind. That's changed a little bit now, but it's still not at the level of tools that we have available when in Web2. So I don't think it's just a question around whether people are good at what they do in marketing and growth. It's also about the resources that we have available to us. And if you can get in whilst those resources are low, which might exclude a certain percentage of builders in this market and people that want to grow a market in crypto, then you have that exclusive opportunity if you're willing to dive deep. So I do believe the same as you, that the space can be marketed so much better. The space can be grown in such a better way. And I think we're both probably living examples of trying to do that, at least trying.
Yeah, we got to do our best. And yeah, there's not really much more to say. I think I love the space. I'm passionate about the space. If I didn't have a company in the space, I'd still be all in. There's nothing more exciting. We've had opportunities to sell Cryptonary for crazy valuations, because there's another thing in the space. Everything's overvalued, but there's nothing more I'd prefer to do. What am I going to do? I sell Cryptonary, we start a Cryptonary 2.0. There's nothing better to do. Traditional markets, they're already, they're corrupt. There's a lot of corruption anyway. There's high barriers to entry. And it's not exciting. We are in the emerging space. So just incredible opportunity all the way around. It just takes a bit of common sense, in my opinion.
Okay, so leading on from what we were speaking about, market, right time, what's next in the growth trajectory for Cryptonary? What strategies do you have ready to go? What strategies do you have in play? The market's going to pick up. What are you guys going to be doing? Give us some alpha, Adam.
Absolutely. I think there are a few things we're working on to maximize growth. I think one thing everyone in Web3 should be conscious of is Web2 is slowly accepting us as an industry. So a lot of advertising channels were not crypto friendly before. So we were able to market on Meta. We weren't able to market on Google. We weren't able to market on Twitter. We weren't able to market on LinkedIn. And these platforms that didn't allow it now do. So we managed to start spending on these other platforms, which was a huge win. The second side of things would be trying to leverage community. Now that we built out a more thorough, more engaged community, it's getting these individuals on board to become advocates of our product. I think one of the most underappreciated aspects of a tokenized asset where you have a community is every single token holder is like an affiliate. Everyone wants to pump their bags. So now in Web3, when you launch a token or an NFT or anything like this, you can basically create an army of affiliates. We saw people in Web2 do this quite a lot, and that's something we as Cryptonary are trying to do. So we are trying to launch a new affiliate program, which will basically reward people very heavily for being a Cryptonary member. So we are calculating our lifetime value as a company for our consumers, and we're trying to offer very high financial incentives for people to come in and continue to promote Cryptonary. So for example, with our affiliate program, we were doing 1 month for 1 month. I recommend Jake, he gets a month, I get a month, right? It's the Uber model. And what we're doing now is I recommend Jake, Jake gets 50% on the first month, but we're scaling that. We're using data once again to calculate what is the lifetime value of a Cryptonary subscriber. And let's offer Jake, like upfront, a lot of capital and potentially in crypto, right? So, lifetime value is $300. Hey, Jake, you bring someone into Cryptonary, $250 upfront. So that's the affiliate side of things. And then thirdly, I think a lot of growth just comes down to if you have a good product and you sign up lots of users or you get a lot of customers, which is why people do airdrops to invite people in, what happens is you are basically creating a flywheel. I bring a user in, that user gives me a lot of feedback, allows me to improve my product, and those changes and tweaks bring in more users, right? And it's like you create a strong network effect too with a business like mine where you're based on subscribers and users and community.
Yeah, I love that. I think for me, the final stage of growth in the magnet model is community-led growth. There's two areas to that. There's the user-generated side. This is where people are just going off on their own back and creating social currency. That comes from digital ownership of a token, like you mentioned, Adam. The second side is the referral side, which is giving an active incentive for someone to go out there and bringing more business, essentially create all of your future awareness, which fuels the front of the funnel again. Awareness in marketing-led growth is the first stage in the magnet methodology. So you can create this consistent loop, and I'm fully on board. I think that the greatest thing about a referral program is if you work back from your LTV and you can calculate what CAC is sustainable to your business, you can go and hand that CAC out. And if the flywheel keeps flying, then that CAC, could be quite expensive. It could be you might be able to pay $50 to $100 to $200 a user because you know what the lifetime value is going to be, and therefore you can create something really compelling. And coming back to that point, don't just set up an affiliate program or a referral program based on what others are doing. You mentioned Uber. We'll give a month, they give a month. Now you're thinking more strategically. What's unique to our business, our lifetime value, and actually how can we still get a 3-to-1 or a 4-to-1 LTV to CAC ratio when considering how much we're bringing in per user and what we can actually afford to give out. So yeah, I definitely think referral programs are on steroids, especially where you can give someone, you don't even need to pay someone, right? You can pay them in your native token if you have a native token.
Exactly.
Which is
If I was
beautiful,
to add one more thing to that, there's a book I recommend anyone who's watching this, if you're a marketer or an entrepreneur or anyone honestly who's interested in growth, you have to read a book called Blitzscaling. It's by the guys behind the LinkedIn and how they grew. And they talk about a few fundamental factors for a company to be able to blitzscale. The context of blitzscaling is you have normal scaling, right? Typical growth, 10% month-on-month growth, or even year-on-year growth, depending on the industry. And you know exactly what you're doing. There's a proven model, and you're going step A to B to C, right? It's like you have a restaurant, you make enough money, you set up a second branch. Make enough money, get a third one, fourth one, fifth one, so on, so on. Then you have fast scaling of a company. When you have a business like ours, where you have a high ad spend, where you can go in and you can say, okay, if we do all the calculations, we can have a strong burn rate where we may be losing money up front, but long term we're making money, we're good. Blitz scaling is fast scaling even into the unknown. That's where, you know what, you don't know all the market dynamics at play, but you can take a calculated risk to create a unicorn, which is something I know is close to both of us. We've discussed this all the time. The attributes of a project that have the ability, you can see my cat in the background, Popcat all the way, the attributes of a business to blitzscale, it has to have the capacity for network effects, it needs low competition, and you need a product that you can create a strong feedback loop in. So it's simple. You must spend, whether that be actual capital or time, to bring in an absolute shit ton of users. When you get those users in, you need full focus on tracking every single action these users make, so you can immediately push your learnings back into product. Because as much as advertising is great and branding is fantastic, nothing beats product-led growth. But you can only do PLG if you have that feedback loop. So highly recommend the book. Absolutely phenomenal. And that's what we're trying to do now with Cryptonary.
I love that. I think the one counter argument I'd give is there's been a lot of blitzscaling in crypto, a lot of blitzscaling, and often. So in the magnet method, have I even shared a copy with you yet? I
You
don't think I
haven't.
have.
You haven't. I saw you
Okay, I
writing
need to do
away,
that.
but you never gave it to me. See, it's terrible.
Okay, I need to do it. Again, it's like it's in the background. It's not going to be the full version, not going to be published for a while yet, but it is there and I will share a copy with you. The reason I say that is because stage 1 is marketing led growth. Stage 2, product led growth, okay? So we're talking about the areas that you're discussing already when it comes to blitzscaling. The third level is business led growth. This is an area of growth that is often forgotten. And this is about the sustainability of the business. So many crypto businesses depend on Web3 revenues, whether that's trading fees or market maker fees, as examples, royalty fees. The market dips, your revenue takes a dip, all of a sudden your business is unsustainable unless you've built a solid revenue model that is not dependent on the market. And these Web3 revenue streams, which by the way, we're extremely lucky to have access to, they simply play an additional part. That way, you can really blitz scale because when the market picks up, you've got all of this additional revenue that you weren't even really factoring in for, which you can put back in to blitz scaling. And then after business led growth comes asset led growth. That's where the token's introduced. Because what I find crazy in this space is how someone can launch a token without knowing they have a viable business model, without knowing that they have a product that people want, and without knowing they can get it to market. It's normally just marketing led growth, awareness and acquisition, straight to token. It's crazy. But I do want to get your thoughts on that as well. That's how I've ordered it. And by the way, community led growth comes after asset led growth, as you want to be able to leverage the asset for community growth. Is that a structure that you think is well set out, or yeah, what's
I
your
like the
opinion?
concept. I like the concept. I think it's very clever. I think you're always going to get differences based off which part of your like entrepreneurial journey you're at, and I think every company is slightly different. I think every element you touched on is key, and I appreciate it. That's a new knowledge to me. I never thought about it in that way, and it does make sense. So I definitely need to read a copy. Um, yeah, I love it. I think the issue in Web3 is because it's such an exciting space, you have a lot of capital flooding in, but these VCs and these retail investors, they don't know what they're doing. They don't know what they're buying. They're getting behind assets that are absolute BS, which is, hey, in one sense, that's what Cryptonary is genuinely trying to fix. We want to look at projects and say, boys and girls, stay away from this. Keep an open mind with that. Because the more people who come in the space and get burned, you're creating an inefficient industry. So if we can direct people in the right way and keep them safe, not only are we creating a more efficient industry, you're inviting more capital in. So absolutely, we need to eliminate, all of us together, these BS projects. You need to call them out. If they're rubbish, they're rubbish. If it's just phony, it's phony. Just blow them out the water. The VCs who aren't really, they don't really give a crap about the space, they're not going to last long anyway. What I would say at the asset level, look, we love community. We love the ability. We love decentralization. We've spoken about this before. Cryptonary, you wanted some alpha. Cryptonary has outlined, and we have a light paper for a Cryptonary token. Now, we have been around since 2017, right?
Whoa. Hold up. This is the first time I'm hearing about this.
Yeah.
Cryptonary token. I'm gonna put the spotlight on you right now, and you can have your minute to hit me with it, because I know what's coming next. We've been around since 2017. We've achieved great product-led growth. We have a great product. We have a sustainable business. We know how to market. Next comes the asset. Let's hear it, man.
Yeah. So look, I'll start off by saying complete concept, and we are not married to this idea because we would never do something unless we thought, it's worth doing. But in short, the idea behind the Cryptonary token was, look, we've grown really well ourselves. We want to get to that next stage. There are a few options. We can self-fund, we can raise, or we can go public. Now, going public in the traditional markets is very difficult. And if anything, it goes against our fundamental values and our core beliefs. You're literally pricing out the people we say, we're trying to work for and we're trying to bring value to. So we bounced some ideas around. One of my personal goals was always to launch an incubator. One of the other founders, his dream was always to launch a fund. One of the other guys in the team always wanted to grow the company, wanted $1 billion Cryptonary. We do retail
That's you,
research.
mate. That's you.
Yeah.
That guy's you. You're the third guy.
Yeah, we do retail research. I think we're number one in the space. Take over the institutional side because they're all crap. Genuinely, we've got terrible hit rates. So it's like, okay, we want to blow up Cryptonary. We want to launch an incubator, and we want to launch a fund. So we said, how could we create a token that could accomplish all three of these? Because if we self-fund, it's probably going to take 5 to 10 years. That's the reality. If we go to venture capitalists, we lose control over the vision and the mission. We're taking away from our audience. Venture capitalist priority number one is always going to be the finances. They really don't care about the consumer. So we didn't really want to go to VC, and we don't have the capital to blow up. You need 20, 30, 40 million dollars if you want to really launch an incredible incubator, if you want to launch a fund, if you want to build out a token with a good security base, you want to grow it, you want to do that asset-led growth where you can create roaring fan base who go out and become advocates. So we said, you know what, maybe we launch a token. It makes sense. We've been around since 2017. Since 2019, in our new vision, the team we currently have around 5 years, we've generated $10+ million in revenue, right? We've had 200,000+ people subscribe at one point or another, many of which actually paid for the subscription. So Cryptonary in of itself is a proven business model. What's our number one service? People come because they want to see our research. They want to see what we're investing in, the trades we're making, and they want to take those insights and make them actionable. We've had people come up constantly and say, will you invest for us? Will you invest for us? Will you trade for us? And we've never tapped into it. And we've also had a lot of projects come to us and say, hey, can you take a look at us? Could you invest in us? Could you help us grow? Could you promote us? And we've never taken a sponsorship ever. So we said, look, how about we combine it all into one, and why don't we back it by an asset? So the concept was the Cryptonary token, the CPT token, acts as a share in Cryptonary, right? So the same way a traditional stock or share is a percentage of a company, the Cryptonary token would have that as one. Number two, we have revenue streams. We already have Cryptonary, the subscription business. We could also, if we have a fund, you can generate more revenue because we outperform the market. That's a reality. And number three, if we became like a traditional company, they do acquisitions and mergers. So the same way projects come to us and they're like, hey, can you invest in our project? Can you promote it? Can you scale it? It's if we believe in the asset, that part of the incubator, we can use some of our capital to partner and buy up a percentage of these companies looking to grow. So it's like, oh shit, on one breath, we can blow up Cryptonary, be the number one onboarding platform for people coming into retail. You're generating revenue. You then put Cryptonary's research and analysis into action to create a type of hedge fund where, hey, you can introduce some kind of decentralization element where people can vote on the trades, the investments, the airdrop rewards / revenue split, even though you have to be careful with that stuff. And then, hey, when it comes to the mergers and acquisitions, hey, we can all be venture capitalists. We have a pool of funds. Let's go out. Let's operate as a company. We all have a say. And let's find projects we're interested in. So the Cryptonary token would be a share in Cryptonary where you have exposure to our subscription business. You have ownership of a fractional ownership of an actively managed fund, which you also have a say in, where you can benefit when we're profitable, that you're hedged against because we'll have a percentage in low risk assets like Bitcoin, Ethereum, stable coins. And then you have a say in finding new emerging projects, getting early exposure. Hey, you want to go farm airdrops? Fantastic. Or you can hold the Cryptonary token, who will receive the airdrops in exchange for Cryptonary tokens. So that's the concept. Perhaps I'll share with you, I'll pass you the document, Jay. You can give me your thoughts, your opinions, but that's a longer term play we have in mind. And we are doing a bit of a soft test with an NFT project that I also own at the moment. But what do you think? That's a rough foundation of the model.
It's a lot to take in. It's
Look
a lot
forward
to
to
take
your
in.
text message later today.
It's going to be when this podcast ends and you're still on the line. That's when you're going to get the information. I think directly. I like that you have utility that's so specific to what you guys do and what you guys have found your value is in. Like that's something that I really like about the model. Because again, going out there, launching a token, saying you're going to build X, Y, and Z, and not actually having built it yet is a huge promise. And the position that you guys are in, like you said, you've had over 200,000 subscribers at any one time. That puts you in a position to understand actually that your product is fitting to the audience that you have. And therefore, if you launch a token, but you don't rely solely on that token to be the fundamental part of your business, you can operate without it. I think, in my opinion, that's the future of this space, because we cannot build the next era of the internet if everything is tied to the performance of a market. Because whether you like it or not, if
Absolutely.
Bitcoin's going down, you're most probably going down. In very rare circumstances, you might not be. So you can't rely your success on that. You've built something without the token. You don't need the token. It's something on the side that can be disattached from your main business. And I think as long as you keep that in mind, then why not?
Absolutely. And I think you called it perfectly. I think people do not understand what tokens are. Tokens should be stocks 2.0. Now, when you look at the stock market, not every company there is a tech stock, which is people betting on the future of an idea. Because that's what most tech companies are. All these tech companies on the stock market are like AI driven. It's still trend, it's narrative, it's belief in a concept. Whereas you have the Coca-Colas and the McDonald's and the Apples that are proven. I think the future of tokenization is when you get the type of businesses that would typically launch an IPO, which is what Cryptonary contemplated, choose instead to launch on Web3 and launch tokens instead of doing an IPO, because of the extra, like the growth potential, the low barriers to entry, right? Geographical mobility, like I said, low entry points. I think Cryptonary is an example of a company that will be one of the very first, if we do, it's still an if, because it has to be the right move, does tokenization right. Hey, what would I do? Let's say I raise, right? Let's say I sell equity in Cryptonary and we pull in $20 million. A percentage will absolutely be used for mergers and acquisitions. A percentage will absolutely be used to actively invest in the market. A percentage will be used to scale the Cryptonary business in of itself. But hey, what if we locked away a percentage of it in real world assets? What if we invested in real estate? What if we bought up some commodities, right? What if we held cash in bank? What if we went in and we bought traditional stocks? That's the transition. I think when BlackRock talk about tokenization being the future, they're not talking about a random meme coin, shit coin, AI concept that doesn't work. They're talking about real businesses built on blockchains. So that's my take.
It's an interesting take. And I'm sure our discussion on that will continue definitely after this. One other thing I wanted to pick up there, you mentioned about having an incubator side of Cryptonary potentially in the future. If there was a project that was launching through that incubator right now in this current market, what would be the ideal go-to-market strategy for them?
It depends on the concept. So if it was a concept that was already proven, let's say someone has an idea to make a more efficient, like layer one blockchain, right? Let's say that's what they're working towards. I think they would have to take a very different approach to someone who's like, hey, I've got a complete unique concept and it's innovative, but I don't have traction yet. And there are good and bad ways to go about it. I'd be lying to you if I said, if you're trying to make money and you're trying to be fast, you shouldn't go to VCs, right? You should. If you're trying to bring capital in, for you to build, you need capital. To get capital, you need to pitch. To pitch, you need very strong branding and you need the right network. Whereas, hey, if you want to take, and I think if you want to do it right, you need to build something, at least build an MVP. And once you have your MVP, I quite like the concept you mentioned. I think branding is very important. I think product-led growth is very important. But I agree. I think if it makes sense, launch the asset. And asset-led growth and business-led growth, absolutely key. Maybe I think business-led growth will be key off the bat. Branding will be important. Creating an MVP, creating a feedback loop to improve the project and product. And then, hey, when it makes sense to launch the token, launch the token. But you need to ideate the token from the get-go. You need to be like, what is my asset going to be? Why would someone invest? And don't view it as a crypto token. View it as you are going to IPO and you want like big like fund managers and you want retail investors to want to buy your company. So yeah, but I need to read your book.
Yeah, you're too nice, man. I will send you a copy after this. But, and by the way, this was not planned promotion of the book because it's not available yet. So, Adam, Adam, you will you'll have a little preview. Don't worry. But just on what you were saying. So, your go-to-market opinion for new projects would be put a product out there first before you even think about going to market with a token. Make sure you have the sustainable business. Make sure you have the right brand that's interacting with the right audience. And then your incubator would maybe take a fancy in them and think, okay, maybe this project is now ready for a token. Am I right in saying that?
For the most part, I think the team is important too. I think you need to have the right people there. I wouldn't invest if I thought you were looking with some nerdy little developers with no common sense about business whose intentions were impure. I personally would never invest in a startup with no MVP. You know, do you see that idea? You see those silly quotes, to be honest with you. Invest in people, not ideas, or, you know, invest in the potential, not in the reality. Guys, you can pull in the best of both. You can invest in the team, the idea, and the reality. So I personally, if I had my incubator, I wouldn't invest in a project if it didn't have the right person, it didn't have the right idea, and that had potential, and there wasn't something to show for it, because I would feel a responsibility for the shareholders in my incubator. I refuse to push a project forward that wasn't well thought out for investors, but also to cover in the research space. We get countless people who come every single day and want us to cover them. And look, it's weird, you know, we're never going to shill, and we're never going to do a backhand deal, we never do a promotion, we're never going to do that. But sometimes someone brings a project to the table and we're like, you know, that's quite interesting. And we want to cover it, but we have to be very careful, because then it looks dodgy because someone's come to us in the DMs and then we're writing about it. So when we find a project, we actively look at how do we cripple this token. We need to come up with every single reason possible to not invest in this token. But then we go back and we give documents back to the founders. There have been many projects, I'll be honest though, names not on the top of my head, who have come to us with a concept. We've ripped it apart, handed them back a document, and they've gone on to make changes. So yeah.
That's cool. I like that. Adding value to the space and keeping it real. I like that. And yeah, I definitely think that separates what you guys have built to others when, you know, you don't have that. You're not the KOLs in the space. Most KOLs are saying this project's going to be the next best thing because they've just been paid a fuckload of that token. Let's be real, right?
Exactly.
But that's not how you guys operate. And I think that's really important to your business model, because it would be kind of a short burning thing, maybe a cash cow, get out if that was the case. But you guys have been here since 2017 now, which is 7 years. You've been running it for 5 years. That sort of stuff doesn't happen if you're out there trying to rug your audience, I suppose, or doing things like that. So I definitely, again, coming back to growth, everything's about growth, hopefully, on this podcast. And that is a key aspect in terms of keeping it real from the beginning and not jeopardizing, not trying to take a quick buck, but being passionate about building something that has a serious future, and being patient, man, being patient in a market that needs patience in every angle. If you want to make it as a retail investor, you have to be patient. If you want to make it as a founder, you have to be patient. And if you want to make it as a company like yourselves, Cryptonary, you have to be patient. So yeah, I think that's
Absolutely.
one of a good point to start to finish off on here. Before we do close, this podcast about growth, I literally just mentioned it a minute ago as well. Is there any advice to founders looking to grow right now that you want to give? Is there any other thoughts that you want to give about growth right now? Do you want to talk about anything that you're growing? Round it out for me, man.
For sure, man. Look, there's so much I could say, and I'll sound like a preacher, to be honest with you, but it comes down to reading. Like, Jake, you know the score. You read books in the sauna. I read at least one book a week, if not two. You have to read, and you have to read books, and you have to read about complex topics, because it will open your mind to the bigger picture. And when you can look at the bigger picture, when you're looking at the world, not from a crypto perspective or a business perspective or a finance perspective, when you're looking at philosophy, psychology, human nature, and geopolitics, when you look at the bigger picture, it just completely changes your mind when you look at the smaller things. So I just would recommend read as much as possible. Read about philosophy, read about psychology, read about politics, read about finance, read about technology. And once you are quite a well-read person, I would encourage you to dive down the rabbit holes of looking at startups, look at super founders, right? Look at people who built unicorns, read into incredible entrepreneurs across any field. If they manage to succeed in the property industry or the tech industry or the car industry, there's probably lessons and takeaways you can take to Web3. So read, find the right people to talk to. There's no harm in shooting someone a DM, right? I've never ignored someone who shot me a message. So many people are out there willing to help and give advice. So if you have a concept, you have an idea, don't be afraid to, say something incorrect or stupid. Go out, share your ideas, share your opinions, and get feedback from people who have already done it. So that's as much as I can say. There's a million other things you can do, but I would say read a lot of books and try and connect with the right people.
I think it's a good point to finish on. Something not so growth-based, but nevertheless something that's extremely important if you're
personal growth, right?
It
starts there. It starts with yourself.
Business growth, project growth, Web3 growth all stems from personal growth.
Exactly.
I love it. I love it. I think that's a great way to round out. So Adam, thank you very much for joining
thank you,
today.
Jake.
No worries, man. It's always been a pleasure. I mean, we have a lot of conversations like this, and it's good to finally record one and put it out there.
Yeah, absolutely. We'll do another one soon.
Yeah, we should. I'd love to stay in tune with the growth trajectory that Cryptonary is on. And like I said, this is the Magnetic Growth Podcast, episode 1. I'm hoping there's a lot of value in it, and it's a good kind of sign of display as to what's going to come next. So, Adam, thank you so much again for joining me, and all the best with Cryptonary's explosive and exponential growth.
Thank you. Looking forward to the next one. Thanks, Jake.